Hello and welcome to Pro Trader Strategies market commentary for Wednesday, December 23rd. It is the eve of Christmas Eve, and I'm Eric Wilkinson. You very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, and how that all comes in to impact the markets with some of my market analysis. And I do the same thing for you folks in these daily market commentaries, but I go a little bit further and talk about option strategies. What I've done there is I've streamlined your process. Over 25 years of trading options, I've found a streamlined process for you all to take advantage of in order to find the optimal strategy for any given assumption. And we aren't just talking about, hey, I got a bullish assumption, the optimal strategy is buying a call. No, it's not what we do here at Pro Trader Strategies. What I've done is over, like I said, my 25 years of trading, looked at how these option strategies react to certain situations, and I've come up with the best strategy for you all to implement around any given assumption. So please check those out at protraderstrategies.com. Like I said, it's not just like picking something out of the hat here. What we do is really look at the most appropriate strategies for any directional move. All right, so without further ado, let's get on with that economic data, see how it's impacting the markets, maybe throw in a little geopolitical stuff as well. All right, across the pond, really pretty quiet. We did get German import prices coming in at 0.5%, slightly upticking. Just the reason why we keep in mind the import prices because it will reflect upon GDP and inflation gauges and all of those things. Here in the United States, we got core durable goods. Remember, durable goods are anything we purchase that's going to last usually over like 3 years, all right? So a refrigerator or something like that. Well, core durable goods strips out transportation items because those have a tendency to be a little bit more seasonal, if you will. And that came in at 0.4%, expected to be 0.5%, so a slight miss there. But we also got a slight revision to last month's number as well, up to 1.9%. All right. When you put back in those transportation items, PCE, price index, stripping out the transportation items, personal consumption expenditures coming in at unchanged, expected to be 0.1%. So a slight miss on that. That's not a good thing, to be honest. That's consumption of what we're as consumers are using, and that's going down, and we're going to see more apparent signs of that, why that data point is missing. Durable goods, putting back in automobiles, helped out that number, coming in at 0.9%, expected to be 0.6%. They did revise last month's number up also to 1.8%. Now here's where we're starting to see the wet blanket. Personal income coming in at negative 1.1%, expected to be a negative 0.3%. Yes, there was a revision to last month's number to negative 0.6%, but still not going to make up for that big headline miss. Personal income, think about it. If we aren't having income, which isn't surprising, especially as a service economy here in the United States, and we don't have restaurants, bars, and other things like that in full swing, well, those people aren't making money right now, and you can see that showing up in this personal income. Personal spending also coming in at negative 0.4%, expected to be a negative 0.2%, and revised last month's number down to 0.3%. So all of those numbers, pretty bearish, to be quite honest. People are making money, and they aren't spending money. Yes, they're making a little bit less than what they're actually spending, which means that they are going into debt. Could be good for Visa, MasterCard, Discover, all of those types of names, or banks. Or it could be like a red flag that these people could be going into default rather soon, especially they don't get a stimulus check, which speaking of, it looks like that bill is not going to pass the stimulus check. It looks like Trump might knock that down. Why? Because probably 80% of it goes to foreign countries, and a lot of people are barking right now at a time like this where we are starving for tax dollars for infrastructure here in the United States. Why are we throwing that money across the pond? Well, that's a great question. So that might not go through. Finally, we got unemployment claims coming in at 803,000, expected to be 882,000. So good, finally a good number. That's the only one we really see there showing up today that actually was pretty decent. And then we got new home sales falling off quite dramatically to 841,000 new home sales, expected to be 994,000. Revision to last month's number down slightly as well. Now, like I said, that new home sales number is the lowest level we have seen since basically for the last 4 months or so, is where we saw that number really start to, lowest number in the last 5 months, let's say. So right around there. That number was skyrocketing, but we've also talked about the NAHB, National Association of Home Builders. That started waning a little bit. We're also seeing some of these other home prices with sticker shock. We talked about that, rising interest rates. We'll talk about that. We've got the steepest yield curve we've had in like 5 years, I think, right now, which means that long-term interest rates are starting to rise rather quickly in regards to the shorter-term interest rates, which we've talked about with the Fed, talking about keeping interest rates suppressed for a relatively long time. Well, the 10-year isn't really following suit with that. Let's take a quick look here at crude oil and then get on to see that bond chart. We can see crude oil starting to click a little bit higher. To me, there's no real, I mean, look at the economic data. It's just not there to support higher prices in crude oil. It's just way overdone to the upside. I think it needs to roll over. Here we have gold futures moving higher today by about $10 on the day, but back into that little triangle that we've kind of set up there. All right, here we go. Bonds coming off by a point and breaking below the 50 Fibonacci, which I was not expecting to see. I thought the risk that was the upside closer to that 177 handle rather than the 170 handle there, which we start breaking below this. That 170 handle is almost a sure thing again. As you can see, we tested it one of the last times we broke down below the Fibonacci here. That looks like we are going to be migrating lower, which means interest rates starting to creep higher, thus that yield curve we were talking about starting to steepen, where the long-term rates are starting to go higher at a much faster clip than what we're seeing at the shorter-term interest rates. All right, then I think that's, yeah, the yield curve is what I wanted to talk about there. All right, VIX is coming off just a little bit. We're seeing equities move higher. As a matter of fact, the Russell, which I usually don't even chart, the RUT is historical highs today as well. So we got the Dow Jones Industrial Average up 170 points. Yesterday, we got below that 9-day simple moving average, which was going to start showing some short-term weakness. Well, today we're trying to scratch and claw to get back above that and back into the 30,000 handle. Of course, that was something that the people want to celebrate, or the retail investors really going to be looking at. NASDAQ is in negative territory as we speak, but at the end of the day, 8 points in the NASDAQ is easily made up, so we can pretty much call that unchanged. And E-mini S&Ps with the Tesla into the E-mini S&Ps starting to charge a little bit higher. Now, people were talking about this the last time tech stocks really started jamming into the E-mini S&Ps. That was pretty much a signal of the top. Well, Tesla's in here, and we'll have to see if those valuations start really mattering in the E-mini S&Ps versus the NASDAQ. But today, not really weighing on that too much. XL is another EV company that is being listed on the exchanges today. So we're going to keep our eyes out for that. That they're more into the heavy equipment as well for EV. So not quite hydrogen like we were seeing with Nikolai, but more battery operated and utility vehicles, more so for bigger infrastructure. All right. Like we said, E-mini S&Ps continue to climb here. As a matter of fact, it looks like they're on the highs of the day, up 15 points, as you can see here with the chart. Maybe just pierced off of their highs, but up on the day. Overnight inventory pretty long. The economic data didn't really slap this market in the face as much as I thought. Maybe because that stimulus package is right around the corner, but I have a feeling that stimulus package is going to have a tough time getting through with as much pork is jammed into this sausage as they could. It might not go through, people, so I would not get your hopes up and spend your stimulus checks before you get those. All right, and that's about it. I am keeping an eye on a couple of other things. I've got my EA Sports trying to make a move to the upside. Square actually finally starting to make that topping pattern look for real after yesterday's rally. Today we're starting to get a bit of an engulfing pattern, but I'm keeping an eye on most my portfolio. I'm not going to add anything, at least as of right now. I flipped through all the charts and nothing's really jumping out at me right now, as it's pretty tight and in a quiet day, probably calming down more so heading into the holiday. So I'm probably sitting on my hands today so far, but follow me on Twitter at Wolfman's blog, as I usually will tweet out anything I add or take off of my portfolio at that time. Also, give me a thumbs up, thumbs down, what you like about this video. Comment in below. Tell me what you like to look at for chart setups in order to get your directional assumption. Would love to hear from you guys. Maybe we'll talk a little bit about that in the daily market commentaries if I see some of you guys commenting down there. But would love to hear what you guys love to look at in order to get a directional assumption, whether it's bullish, bearish, or market neutral. All right, so that's it. Have a great one. And if you can't take that, take it easy.